a.m. in New York City, 10 a.m. in London. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Oil wavering after 3 days of losses as U.S. and Iranian forces clash near the Strait of Hormuz. President Trump's global tariffs at risk after a federal court finds them unlawful in a narrow decision, albeit for those plaintiffs. And Treasuries hold steady ahead of the April payrolls report. Let's get a check on markets around the world now. What's been happening in the last few hours? Justina Lee, give us the latest out of Asia and Europe.
Good morning, Vonnie. Now, U.S. futures are up today, but it's a different story for cash equities everywhere across the world. Now, if you look at Asia today, it's down 0.8%. And I kind of want to draw your attention, especially to the Australian benchmark, which is having its worst day in about 10 weeks. Now, it's also having a bad day is the Korean currency, which is underperforming its peers in Asia in general. And that's because we're seeing kind of a little bit of a gain in oil, and that's punishing a lot of energy importers here today. And now, if you look at Europe here, it's a similar story when it comes to the stock market. The Stoxx Europe 600 is down quite a bit. And, apart from that, we have to pay special attention to the UK today after those local elections showed sharp losses for the Labour Party. Now, it seems like markets are reacting pretty calmly so far. The pound is actually up against the dollar, and actually the long end gilt yields are down quite a bit. And I think what this really shows is that a lot of those results were already priced in. People coming into those elections were expecting sharp losses for Labour. But it's interesting that those gilt yields actually fell further after Prime Minister Keir Starmer said that he is going to stay on as Prime Minister and leader of the Labour Party. And I think what this really shows is that people are still paying close attention to the fiscal path for this country today. Bonnie.
Absolutely. Justina Lee, thank you so much. That sterling strength, very interesting, coming, of course, as the dollar weakens too, and versus some other majors as well. We'll get to that a little bit later. But S&P futures pointed higher for right now. We did see that drop off yesterday with the index down 0.4% by the end of the session, because those clashes and reports of them did start to come through before the close yesterday. Brent crude topped $100 a barrel. It's still just barely above that, but it was up about 3% at one point. And WTI is still holding on. It's still trading below $95 a barrel. Not too much happening in yields either. We're down another basis point or two across the board. The dollar index, as Justina was pointing out, a little bit lower right now, particularly versus quite strong sterling. The yen also strengthening today, and the euro strengthening quite substantially. We also have the Swiss franc higher as well, perhaps a little bit of a safety trade as well. And of course, jitters before the non-farm payrolls report. And then the VIX, well, it was well above 17. It's just trading around that 17 mark now. So as you can see, even with those jitters out there, equity risk at least is showing there's a lot of sanguine sentiment in this market. All right, let's get to some individual movers now. Back over to London and Chloe Melly. Chloe.
Good morning, Vonnie. Cloudflare is sinking this morning after providing a forecast that missed analyst estimates and also announcing it will cut more than 1,000 jobs. And so investors had been really keen to see whether or not Cloudflare would be able to sustain very strong momentum recently. But it seems that there is a little bit of a slowdown, and therefore we're seeing the shares down very significantly this morning. It is the same thing for Trade Desk, which is also down this morning after weaker than expected results for that digital marketing company. There had been a lot of weak sentiment going into the earnings because of concerns around competition from Amazon, and so we are seeing that stock also down this morning. And finally, Upwork is also in the red after lowering its guidance. This signals really weak demand for that short-term freelance labor, because those are the types of workers that are really going to be probably likely replaced by AI. And so Upwork has announced some job cuts, but it remains to be seen whether that is actually enough to stabilize the business at a time when we're seeing so much structural change in that industry.
Chloe, thank you so much. Chloe Melly there for us in London. And coming up this hour, we're going to count you down to the jobs report with Veronica Clark of Citi. Let's turn back to oil now, wavering around $100 a barrel on Brent after prices bounced back following renewed clashes between the US and Iran. President Trump spoke to reporters on whether the ceasefire remains in effect.
They trifled with us today. We blew them away. They trifled. I call that a trifle. I'll let you know when there's no ceasefire. You won't have to know. If there's no ceasefire, you're not going to have to know. You're just going to have to look at one big glow coming out of Iran. And they better sign their agreement fast.
Joining us now is Jumana Bersetchi in Dubai. Jumana, do we know the Iranian posture? We had these literally conflicting headlines at the exact same time yesterday, suggesting that Iran was considering the one-page proposal, and there were these clashes happening.
That's right, Vonnie. So you have to distinguish between the diplomatic efforts on one hand, and the other hand, the situation on the ground, especially around the Strait. And things were looking a little hairy overnight. You just played some comments there from President Trump signaling that the ceasefire is still in place despite the fact that U.S. and Iran exchanged fire overnight. CENTCOM saying that 3 U.S. Navy warships came under fire by Iran throughout the course of the evening. They responded. They hit back at Iranian coast. They hit back against drone and missile launchers, including some command and control centers as well. That being said, as we heard from President Trump, he says that the ceasefire will still be maintained. However, it also came along with a threat, and this was later posted to his Truth Social account. He said, we'll knock them out a lot harder and a lot more violently in the future if they don't get their deal signed fast. So clearly, the president is working on an accelerated timeline to try to get to some form of a deal with Iran. Now, we haven't had a formal response yet from Iranians. We are expecting them to come back to that one-page memorandum of understanding proposal in the next coming days. Let's see. I mean, the timeline of these things tend to be a little bit fluid. But from what we understand from the Iranian spokesperson of the foreign ministry, again, what they have characterized this paper as being rather maximalist, and that the demands that the U.S. are asking for on this sheet of paper are not necessarily demands that Iran will concede to. So the question is whether there can be enough compromise between the two sides to breach the respective gaps, or at the same time work towards some form of a phased solution where you do get a maybe temporary lifting of the blockade around the Strait of Hormuz, and then work on some of the thornier issues around the nuclear file, around their ballistic missiles, and around the sanctions relief. But all of those topics are going to take a very long time to negotiate. And I just want to remind people that JCPOA, which is the nuclear deal that President Trump pulled out of, took 20 months to negotiate. This nuclear file, it's going to be a tall order to get it over the line in 30 days. And for markets, and you're just talking about the price of oil, the question is, do we get a ceasefire with oil being released or without oil being released? Will the Strait blockades effectively be lifted? And that is the question that we're going to be looking to get answered in coming days.
Yeah, that deadline's supposed to be coming up, but as you say, these things are very fluid. Jumana, thank you so much. Jumana Bersetchi. Turning to trade, President Trump has been dealt another blow to his economic agenda with the latest 10% global tariffs declared unlawful by a federal trade court. Bloomberg's Brendan Murray joins us now for more. Brendan, it was a narrow ruling, so it was a ruling for these particular plaintiffs only, but could it serve as precedent in other appeals now?
Yeah, exactly. It absolutely could. And the timing is bad for this ruling for President Trump's for a number of reasons. The main one being he's headed to China next week to try to extend a tariff truce and to try to maintain the relationship on an even keel with President Xi Jinping in Beijing next week. And so he goes to the U.S.'s largest geopolitical competitor with less leverage, given that he's been dealt another legal setback. He's also in the process of trying to get the U.S.-European Union trade deal over the line, and so in the middle of that, he's lost this temporary 10% tariff that he's applying on the EU and other countries. So we saw the president also in tandem with almost simultaneously with the Supreme Court, with this latest court ruling, give the European Union another several weeks here until July 4th to comply with their end of the trade deal. And then of course you have if this broadens out to apply to every importer that's paying this tariff, you've got a whole lot more refunds, perhaps on the order of $30 billion worth of refunds to give back if that's where this ends up in the legal process. So you add that to the IEEPA tariffs that were struck down, that was about $170 billion. You're looking at $200 billion in tariff refunds that could potentially be coming back to importers from the U.S. Treasury.
Yeah, and speaking of this EU deadline now, that's July 4th, it comes after a call with Ursula von der Leyen. Does the EU need to agree to this? Does it need to, use the July 4th deadline to motivate the group of countries to come together? Or can it, come back with a counterattack?
It seems like the Europeans understand that the tariffs are going to change between now and the time that those 10% tariffs expire. There are a number of 301 cases targeting the Europeans that are in the process of being worked out, and there are consultations that need to take place between Washington and Brussels on those particular investigations. We're talking about the industrial overcapacity probe, as well as the probe in the 301 case on forced labor. And so those are working themselves through the process, and they're going to be rolled out here in the next several weeks before presumably the 10% tariffs expire on July 24th. And so the Europeans seem to be biding their time, playing a bit of a stall game here until they see what those tariffs look like and whether they're going to be matched up with the sort of 15% rate that they negotiated with President Trump over the past 6 to 9 months.
All right, and so the wheel turns. Brendan, thank you so much, Brendan Murray there. Turning to tech now, a sign of caution around AI. SoftBank has downsized its plans for a $10 billion margin loan backed by its OpenAI stake. Bloomberg learning that the Japanese investor, in separate talks with potential lenders, may target an amount as low as $6 billion. Let's bring in Bloomberg's Tom McKenzie for more. $6 billion still isn't too shabby, Tom, but I guess it's never a good sign when you downsize the potential for something.
Yeah, it's quite the downgrade, to your point, from 10 billion to 6 billion. Conversations we know are still continuing, so that number could change. But to your point, this is a signal in terms of how far creditors are prepared to go to fund Masayoshi Son's AI ambitions, the head, of course, of SoftBank. And he's borrowed very heavily to fund those ambitions. So what our reporting suggests is that creditors are a little bit cautious. They're cautious as to how you value OpenAI. Obviously, it's not publicly listed. There may be an IPO later this year. How you value it. The Wall Street Journal, of course, came out with that report a couple of weeks ago suggesting that OpenAI had failed to meet those pretty aggressive sales targets. OpenAI came out and pushed back on that. The CFO said we see a vertical wall of demand. But nonetheless, it did raise questions about whether or not they were seeing that lead fundamentally undermined by Anthropic, which has been powering ahead. And we know that race is incredibly competitive between the two. So it seems those factors have fed into this caution amongst creditors. And to your point, you may see that number come down to about 6 billion. We continue to watch this. SoftBank overall, they have faced questions in terms of how much leverage they're putting into the AI push out. They've been downgraded, their credit to negative by S&P, for example, and their CDS, their credit default swaps, the price of those have actually jumped in terms of insuring, as a way of insuring against some of that credit. The stock is up pretty significantly year to date, but there are growing concerns about the creditworthiness of this business as they continue to borrow heavily to fund this build out of AI.
Tom, I want to ask you about TSMC's sales in April. Obviously, TSMC, a huge supplier to NVIDIA, AMD, and so on. They grew 17.5%, which sounds like a nice month to me, but I guess this also is showing signs of softness.
Yeah, always in context, isn't it, Vonnie, in terms of these numbers? So, yes, 17.5% for the month of April in terms of sales increase for TSMC that produces, that actually manufactures those chips for NVIDIA and for AMD and for Google and for Apple. The context is the analysts, we've seen this very strong growth for TSMC. They sit right at the forefront in terms of actually producing these AI accelerators. But analysts have expected for the month, for the quarter that ends in June, growth of about 35%. So we're getting 17.5% in April. There's going to have to be a lot that comes through in June to make up that 35%. I think that leads to that caution. But TSMC is investing heavily to continue to build out its foundries to produce these chips, but maybe a little bit of softness that's come through relative to the kind of pace of growth that we've seen up until this point coming through from that key Taiwanese manufacturer.
All right, Tom, thank you so much. Tom McKenzie. Now, two other top stories trending on the terminal this morning. Bloomberg sources say a key company behind Thailand's national AI push is suspected of helping smuggle NVIDIA chips to China via Supermicro servers. U.S. prosecutors outlined a scheme in which Supermicro's co-founder allegedly worked with an unnamed Southeast Asian company to divert chips in violation of U.S. trade rules. The prosecutors laid out allegations detailing the operation in a March indictment that sent Supermicro shares into freefall. Prime Minister Keir Starmer of the UK said he had no plans to step aside as Labour leader after early results in local elections showed Nigel Farage's populist Reform UK racked up sweeping gains in local elections. Labour lost almost half the seats it was defending. Commerzbank plans to cut 3,000 jobs as CEO Bettina Orlopp steps up her defence against a hostile takeover attempt by UniCredit. The cuts aim to help double the bank's profit by 2030. Orlopp also raised Commerzbank's full-year profit guidance to at least $4 billion. Coming up, one country's gain, another country's loss in the search for talent. Wall Street Week brings us the story of New Zealand's brain drain. That's next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. We go to New Zealand now for the latest episode of Wall Street Week. The best and brightest in the country are seeking higher pay and better jobs in neighbouring nations. Consequently, the lack of productivity weighs on economies and broadens the wealth gap.
I was working as a lawyer in Auckland for about a year and a half, and I was essentially living at subsistence level, pretty much unable to save any money. Once you get paid, it would just be rent, groceries, gas, all the money's gone essentially. Everyone's got like a different sort of version of events, but for me at least, I basically doubled my income in less than a year, and the cost of living went down. So the grass was very much greener.
And it's showing up in the numbers. New Zealand's net citizen migration is at its lowest since official data began in 2001. In other words, people are leaving like they always did, but now they're no longer coming back.
New Zealand has got a very big productivity problem in that its economy is just muddling through.
Gillian Tett is provost at King's College, Cambridge.
There's a lot of self-inflicted wounds in New Zealand, not least, for example, the NIMBYism that prevents people from building enough houses to ensure that everyone could get access to a house cheaply and easily. So you're creating in New Zealand a real intergenerational inequality problem in that people who are inheriting assets are doing well, others aren't.
New Zealand's problem is not unique. Poland experienced a brain drain after joining the EU. Ireland did so in the wake of the great financial crisis. And Portugal is the latest in Europe. In all three examples, citizens saw new opportunities for higher pay and better jobs elsewhere. But Tett says the loss of intellectual capital isn't always a bad thing.
Is the flow of intellectual capital necessarily a zero-sum game? I saw a recent report that suggested actually both countries could benefit because people, when they go someplace else, maintain relations back with their home country. And there can be a flow of capital, of business across the boundaries. Can it be something that could benefit both countries?
One of the biggest mistakes people make is to regard intellectual capital as a zero-sum game and to assume they have to hang on to their brilliant minds at all costs and stop them from going around the world. That was a disastrous mistake because history shows very clearly that to get innovation, you ideally need to have one or two things happening, ideally both at the same time. And it makes my blood boil when I see governments trying to shut the doors on people, whether it's the European Union and the UK, which have not yet implemented a youth mobility scheme. That makes my heart break, frankly. The fact that it's become harder to move scientists back and forth across borders, well, not just scientists, but social scientists and humanities scholars as well. But also what America's doing at the moment is not helpful in terms of sparking that extraordinary, if you like, chemical mix of brilliant minds coming together.
Catch more of that story on Wall Street Week this evening on Bloomberg. That's 6 p.m. New York time, 11 p.m. London time. Coming up, Elon Musk facing criminal charges in France still. That and a look at what else is making headlines in your front page news next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York, and it's time now for your front pages. First up, the Financial Times leading with big tech's $725 billion AI spending spree, sending free cash flow to a decade low at 4 hyperscalers. The FT says combined free cash flow for Amazon, Alphabet, Microsoft and Meta will be about $4 billion in the third quarter. Now that's down from an average of $45 billion each quarter since the COVID pandemic. Next up, the Wall Street Journal reporting Elon Musk has been summoned to France again to face criminal charges. The new summons coming just weeks after Musk failed to show up for a voluntary interview with French prosecutors. The investigation began in 2025 with allegations of a biased algorithm at X and has grown now to include charges of violating the secrecy of correspondence, dissemination of child pornography, and the creation of sexualized deepfake images by its Grok chatbot. And finally, the New York Times reporting the Trump administration has approved sales of $17 billion worth of interceptor missiles and related services to Kuwait, the UAE and Bahrain. This in spite of alarm among some Pentagon officials over dwindling U.S. stockpiles of such missiles. All right, let's take a look at FX. An interesting trend today. We're seeing the dollar weaken, particularly in the last 45 minutes versus the major currencies. So if you look at sterling, it's up 0.5%, even though we're seeing losses for Labour in local elections. The euro stronger by 0.4%, and the Swiss franc stronger by 0.3%. This, of course, before the job payrolls. But the dollar doesn't tend to move that much before payrolls. Coming up, we're going to be speaking with Citi's Veronica Clark about just that. This is Bloomberg. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Oil wavering after 3 days of losses as U.S. and Iranian forces clash near the Strait of Hormuz. President Trump's global tariffs at risk after a federal court finds them unlawful in a narrow decision, though, for these plaintiffs. And Treasuries hold steady ahead of the April payrolls report. So let's take a look at those markets then. We are seeing crude trade around $100 a barrel, just below that now on Brent. So a little bit of relief potentially that these clashes that we saw several hours ago haven't escalated into anything more major, at least yet. And the president, of course, saying that no ceasefire was broken. S&P futures pointing to gains as well this jobs day. This after the S&P was down about 0.4% yesterday. 60% of its components were lower in the session. Tech, though, hit a record again yesterday, even as some of those popular trades like the memory trade, the optics trade, they retreated. Let's move to yields. We're not seeing too much movement there, although we are down about 2 basis points on the 10-year, 436.62, and we're still off 5% on the 30-year, but not as far off it as we were in the last couple of days. The dollar index is weaker today. Stronger euros, stronger sterling, stronger Swiss franc, and the VIX index continues to just be nice and calm. Equity risk, obviously not too much on people's minds. For some stocks to watch now, let's get to Chloe Milley in London. Chloe.
Good morning, Vonnie. Cloudflare is down more than 15% this morning after quite a disappointing forecast and also announcing that it will cut more than 1,000 jobs. And so expectations going into the earnings had been quite high given recent very strong momentum for that company. And so those results are seen as maybe a little bit disappointing, and that is reflected in those shares this morning. Moving on to Trade Desk, which is also down in pre-market after also providing quite disappointing forecast. And so this the sentiment going into the earnings had already been quite downbeat because of growing competition from Amazon. And so the results really failed to reassure. And finally, Upwork is also down this morning after lowering its guidance. This signals really weak demand for freelance labor, given that these are the types of jobs that face the threat of AI substitution. Upwork has announced a big workforce reduction, but is that really going to be enough to stabilize the business at this time of growing structural change? That is still unclear, and we are down more than 22% this morning.
All right, Chloe, thank you so much. Chloe Melley there. Just under 3 hours now until the April jobs report. Here's Bloomberg's Ven Ram for a preview. Ven, what should we expect today?
Well, I mean, the markets are thinking that we are going to get a next net addition of 65K to the April report, which would be pretty good. Pretty reasonable, at least from a Fed standpoint. The unemployment rate is supposed to come in at north of 4%, so which is also par for the course considering the numbers that we have been getting. The big picture here in all this, Bonnie, is that the U.S. economy is performing resiliently well, and I think that that's the big takeaway for the Fed, because they know that they've penciled in a real growth rate of 2.5% for this year, which is already above trend. And if there are signs that these peace in Iran can hold, and we get to an agreement, I think that the markets will then pivot to the next theme, which is the AI theme, and that is where the Fed comes in. Are they going to be able to raise rates, or should they be cutting rates? They shouldn't be cutting rates, probably, if your economy is growing so well, if it's resilient, and your core PCE is still elevated.
All right, Ven, thank you so much. Ven Ram there from our M Live team. Citi's Veronica Clark expecting a 15,000 decline in non-farm payrolls for the month of April. She adds, quote, "In our base case, data over the coming months show a clearly weaker trend, with the unemployment rate rising above 4.5% by the third quarter, as has been the pattern the last few years." I'm pleased to say Veronica joins us now. Veronica, at this point, this is slightly out of consensus, I would say. You're certainly the more bearish on the street. Why such weakness this month?
Yeah, this month I don't know if the market's going to be particularly reactive to it. The reason our models are showing weaker, and I think how the market would react to it, is we had that really strong number in March, and this data have gotten very volatile. It's really hard to read signals in any 1 month of data. We saw big job gains in January, losses in February, bounced back in March. So this is just really a normalization, mean reverting. But I do expect the trend will be weaker over the coming months too.
Yeah, I mean, if we do see a drop today, is it something we should start getting concerned about, or is this very much about the data, how it's collected, and the problems that we're seeing with that?
Yeah, I think today might just be dismissed as volatility, right? That's been the pattern we've seen really for about a year now. It's really every other month we do see total job losses. So that volatility has been with us for a while. So I imagine this one will get somewhat dismissed if it is weaker. But yeah, it matters more, the unemployment rate and what that looks like, especially as we get into the summer. We've been stuck in this 4.3 to 4.5% range for a while. But the trend has been the last couple years that the summer data tends to look weaker. And by the end of the summer, we get a higher unemployment rate. So if that holds true again this year, I think that obviously gets a lot more attention.
So where are you spotting the weakness in the economy that perhaps other economists and other houses are not seeing so much?
Yeah, it's really this low hiring, low firing environment, which I think everyone, for the most part, understands and agrees on. But I really do worry about that low hiring issue. We've had a lot of changes with immigration policy and everything, of course. But for the last couple years, we've not hired as many people who are entering the labor force and looking for jobs. When you survey consumers, they still feel really bad about job availability. And what that has meant is that when you get to the summer, you usually do a lot of hiring in the summer. That's, of course, when you get new students who are graduating and looking for work for the first time. And that hiring pace is not kept up with everyone looking for work, and that's been enough that the last couple of years the unemployment rate has risen by 3 to 4 tenths every year.
Did it surprise you then that we saw 3 dissents at the FOMC in favour of taking out the easing bias language?
Not so surprising, of course, given that the focus right now is very much on the inflation data, right? So we have had seemingly stable labor market. Again, I think that probably changes as we get into the summer, but it has been stable for a while, and the focus, of course, is on inflation. And yeah, the Fed is probably pretty uncomfortable with where we're going into a new inflationary shock with core PCE that was already not at 2%. We're already higher than that.
So the Fed will be in a bind. If, as you say, we do see significant or even small labour market weakness over the next few months, I know you're calling for a cut in September. Yeah. How would the Fed justify that if we're going into a rising inflation environment?
Yeah, I mean, it certainly depends on what we see in the data. How we do see the data playing out the next 6 months or so is that, yeah, the focus right now is absolutely on inflation. We'll get an inflation reading for April next week. Even core inflation will look a bit stronger. There's just some technical issues in there. But for April, May data, yeah, we could still see uncomfortably strong inflation. But we are expecting a cut in September, and I think what has to happen before then is we'll have data for June, July, August inflation. I do think those months could look better. Once we see that summer data, where we'll see, I expect the tariff goods inflation to fade. I don't think that we'll see a big pass-through of higher energy costs to core inflation. And then you're feeling a bit better at the same time the labor market starts to look worse.
But won't there be a double pressure on the new Fed chair, assuming Kevin Warsh is in and up and running by then? Because on the one hand, if he cuts, he'll be accused of being politically biased. And on the other hand, he is a conservative economist. And whatever he may say, it probably would be difficult for him to cut.
Yeah, it's certainly going to be difficult. Presumably his first meeting, of course, in June. Probably for a couple months it will be a bit difficult. And he is just one voice, among a committee who is deciding this. So for the rest of the committee to be on board, I think you do need to see it in the data. And yeah, our base case for cuts is not so much premised on who the new chair is, but what we think the data will look like.
So what happens if we get a surprise number today, a very positive number or what have you? Assuming the Fed is seeing what you're seeing and, many of the members are looking for weakness, do they just scratch their heads or do they believe the data?
Yeah, I mean, going into this April reading, we do still have a lot of positive signs for the labor market. Initial and continuing jobless claims are very low. Some surveys, on hiring don't look, terrible necessarily. So I don't know if a stronger number would be too much of a surprise, especially because we're coming off of a couple quarters where the narrative now is this stability in the labor market. We don't have to be so worried about it. So I don't know if it would really change anyone's base case for, Fed on hold, of course. For us, it more has to do with, what does the data look like in the summer? That's when we've seen the weakness the last couple of years. So.
Yields have been a little elevated, to say the least. Recently, we even saw, highs of the year. When does the market start to reprice this cut, assuming it starts to believe there's one coming?
Yeah, I think probably maybe around end of June or so. That's kind of been the pattern the last few years also, where once you start to get the Q2 data and we're coming off of the start of the year where inflation's been stronger. Usually the in Q1 the last couple years starts to look better. Again, the focus is definitely on the inflation data the next couple months. But yeah, as we get into the start of the summer, that's when data have started to turn a little bit towards weaker labor market, softer inflation, and expect that will happen this year.
Veronica, always starting off our non-farm payrolls day with us. Thank you so much for joining us. That is Veronica Clark of Citi. And tune into our interview with National Economic Council Director Kevin Hassett. That's at 9 a.m. Eastern. Now to other top stories trending on the terminal this morning. DoubleLine Capital CEO Jeffrey Gundlach is repositioning some of his funds in case the US government restructures its debt in response to a potential recession. Speaking on Bloomberg's The Close, Gundlach said he has replaced higher coupon treasuries with the lowest coupon ones of the same maturity in some portfolios. Here's more on how he's allocating.
Cash, I think you can deploy it at lower valuations on risk assets and higher yields on fixed income. I've liked commodities for a long time. Yeah. I like about a 20% position. I personally have a higher one, but for most people, 20% position in something that's real assets.
Nintendo is planning to raise the price of its Switch 2 console to $550 from $450. The global price change will happen September 1st. The move acknowledges pressure on profitability for its flagship device heading into its second year on the market. FIFA tripled the price of its best available tickets to the World Cup final in New Jersey, listing them at a whopping $32,970. The Associated Press says the previous high price was around $11,000. FIFA said it had to apply market rates and defend against resellers. And it is, of course, New Jersey. Coming up, a ceasefire with Iran looking more fragile after fresh clashes near the Strait of Hormuz. That's next. This is Bloomberg.
They trifled with us today. We blew them away. They trifled. I call that a trifle. I'll let you know when there's no ceasefire. You won't have to know. If there's no ceasefire, you're not going to have to know. You're just going to have to look at one big glow coming out of Iran. And they better sign their agreement fast.
The clash between the US and Iran threatening the fragile ceasefire. This as Tehran has yet to respond to Washington's proposal to potentially end the war. Jonathan Tamari of Bloomberg Government joins us now from Washington. Jonathan, the president keeps trying to provoke Iran into a favourable response. It hasn't worked yet. Is this latest salvo likely to work?
So far, similar things like this have not worked. The U.S. has tried bombing. The U.S. has tried economic pressure. And it has not led to an agreement or concessions that satisfy President Trump. Now, there is a deal on the table, and the word is that the U.S. is expecting a response from Iran in the next 2 days. but Iran has not shown that it is eager for a deal right now. It seems to think that it can outweigh the U.S., that the economic pressure on President Trump will outweigh the pressure they're facing. So we'll see what their response is here. But so far, nothing he has worked has brought about the deal that he wants.
Yeah, I mean, you have to wonder if the Iranians are even worried about this potential deadline. I mean, what if the 48 hours comes and goes? Will Trump be accused of not sticking to his deadlines once again?
Yeah, and I mean, that is the problem. He's threatened many, many times to escalate the conflict, and he's declined to do so. And I think that there's a sense that now that the fighting has stopped for the most part for several weeks, that the president is reluctant to go back into a full-fledged armed conflict again, which I think only undercuts his leverage even more. He does not want to come to Congress for approval of this. And I think the war is unpopular. He's looking for a way to get out of it, not to escalate it. But again, that gives him that much less pressure to put on Iran right now.
Of course, there's the Trump-Xi summit expected to take place next week. It seems to be on track in spite of all of this. And now we're hearing that Trump is bringing plenty of CEOs. Steve Schwarzman, who has a big relationship with China, of course, Citi's Jane Fraser, and also some of the tech CEOs. How will that change the dynamic?
Well, I think that China is being said to be putting some diplomatic pressure on the U.S. To try to get a deal here. I think, or I'm sorry, to try to scale down the war before this summit next week. It is signs that it is still on track. I think the president, by bringing these people with him, will hope that he can come back with some kind of economic deal. But right now, the hopes are not very high that there'll be any really major agreements between the two leaders at this time. It might be something that's more small and more for optics than a major agreement. Is what it sounds like at this stage, although there's still a little time to go before they sit down.
Yeah, I mean, it's definitely a hefty entourage that he's bringing. Now, this latest 10% tariff, the 122 tariffs, found unlawful by a U.S. trade court. Jonathan, it is a narrow ruling, so applying just to these plaintiffs. But at the same time, it's another ding for President Trump, right? And it potentially could be used as precedent in further lawsuits.
Exactly. I mean, this is not as far-reaching as the Supreme Court case that wiped out a much larger swath of his tariffs, but it is, as you say, a precedent. Others could possibly sue on the same grounds. And as we were just talking about leverage in these other negotiations with China, with Iran, it kind of undercuts the president's leverage when he's pressuring other countries to reach trade deals as well, because they know that these tariffs may not stand up.
Yeah, absolutely. Jonathan, thank you so much. That's Jonathan Tamari of Bloomberg Government. Turning to tech, a sign of caution around AI. SoftBank cutting its plans for a $10 billion margin loan backed by its OpenAI stake. Bloomberg learning that the conglomerate, in separate talks with potential lenders, may target an amount as low as $6 billion. Let's bring in Matt Bloxham of Bloomberg Intelligence for more. So, Matt, is this jitters particularly around this deal and this particular, set of loans, or is it just the space in general that investors are becoming a little more skittish around?
Yeah, hard to say, but I think it probably is more specifically about this particular deal and the underlying security that's it's based on. So this is about their stake in OpenAI, and I think there's a couple of things going on there. One, obviously, credit investors have some kind of questions about liquidity of a non-listed equity that's kind of backing the loan. And also we're seeing this kind of big shift in momentum between OpenAI and its big rival Anthropic. And obviously Anthropic is getting the upper hand, I think, right now in terms of its kind of sales momentum. And so I think that's kind of perhaps shifting investors' perspectives a bit about on the appeal of the exposure to that underlying OpenAI equity.
Matt, what should we make of TSMC's April sales? So they grew, quite healthily, 17.5%, and yet it's been taken as a sign of a big slowdown. I guess they should have grown a lot more than that in April?
Yeah, it is. So it's 17.5% growth. I think that the previous month they grew about 45%. Now, if you look at their monthly sales, the year-on-year growth does move around quite a bit, but 17.5%. In April is kind of a long way short of the 34-35% growth that the market has penciled in for the quarter as a whole. So it does mean there does need to be quite a big pickup in May and June. I think we have to kind of remember the context that only a few weeks back the company upgraded its full year sales guidance. So I think when you look at the picture as a whole for the year, the momentum is still very much with them, and this probably is primarily just lumpiness in how new revenue comes into the books. And I think to some degree there's some kind of FX headwind there, which has also kind of crimped that local currency growth number too.
Matt, on these neo clouds, what's happening at CoreWeave? I mean, it's had a massive run up in its share price, but then it gives a disappointing forecast. Its losses widened once again. It seems like confidence, comes and goes in this company.
It does, and I think in some ways is a little bit similar to the TSMC story that, as these companies grow, there's quite a bit of volatility on the month-on-month or quarter-on-quarter growth rate. They posted a better than expected print for the quarter they reported, but that guidance for the forward quarter, 2.45, 2.6 billion short of the market's 2.7 billion estimate. But again, the management very confident in the forward business model and talking about very much a second half weighted surge in momentum. They're investing heavily to bring new capacity on stream that they can lease to the big AI platforms like OpenAI and Anthropic. So I think there is still confidence there that you'll see a momentum pick up in the second half of the year. And I think so this is again just a little bit of that lumpiness you see at these kind of relatively early stages of growth with these companies.
Yeah, it has had some massive moves. It was trading at what? I mean, we're up 134% year over year at this point. Matt, thank you so much. Matt Bloxham of Bloomberg Intelligence. Coming up, your non-farm payrolls report, front and centre in your trading day ahead. That's next. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York, and now a look at what's ahead today. It is Jobs Day. U.S. April non-farm payrolls coming in at 8:30 a.m. Eastern, of course, and then at 10 a.m. Eastern we get University of Michigan sentiment data. We'll be looking out for inflation expectations there. Don't miss our interview with Chicago Fed President Austin Goolsbee. That's at 2 p.m. Eastern. A few pre-market movers. Monster Beverage up almost 6% in the pre-market. First quarter earnings beat estimates, and JP Morgan has raised its price target on Monster to $83. Cloudflare, well, its forecast missed. It's down 17% now in the pre-market. It's cutting 1/5 of its workers in a move to an AI-first model, and that won't be the first of those stories that we hear. And then Trade Desk continues to have a really tough time. Weak earnings, the forecast disappointed. It's already down 38% this year, and now it's down another 15% in the pre-market today. Let's look at your macro picture for today. Non-farm payrolls day also clashes, potentially picking up in the Middle East again, and we have oil trading just under $100 a barrel. But S&P futures quite sanguine, pointing to gains. We have the 10-year yield down about 1.5 basis points, so again, a little calm in the Treasury market. The dollar index is a little weaker. Very strong sterling, euro, and Swiss franc today. That's it for Bloomberg Brief. Surveillance is next. This is Bloomberg.